What's going on, guys? It's Mariano. Welcome to another video. So this is actually going to be the first video in a long series of tutorial videos on what is trading and how to trade for beginners, and then for intermediate, and then we'll go up to advanced trading techniques and all of that too. But this is the first video, so bear with me. I'm going to try and break this down and make it simple to the best of my ability. If you have any questions, feel free to ask in the comments, or if you're a part of the Discord group and that's where this video happens to be, feel free to personally message me or send a message in the group chat, and I will get back to you with any questions you may have and provide you with the best answer that I can. But to get right into this video, the first thing I want to talk about is what is trading and what are the different types of trading that you can involve yourself in. I think it's a good idea if you're trying to get into this space and you're thinking about getting into this space, into the trading space, to really know what you're getting into and to also be smart about it as well. It is not easy to trade. It is very easy to gamble in the stock market or the crypto market. Yes, it's easy to do that, but it is not easy to effectively trade and make profit consistently. The majority of people that try to and get involved in this do end up failing. You can look at the statistics, and there is a reason for that. Even myself, I have to be on top of myself all the time and all the decisions I make and hold myself accountable, because it is very easy, especially if you don't typically take things like this seriously and you start to have too much fun and you get kind of addicted to doing it and you view it as a game. It's very, very, very easy to just start making 50-50 chance decisions, because why not? And next thing you know, the day ends and you're down 50% of your entire account or 75% of your entire account. And then what are you going to do tomorrow to make that money back? Probably the same things again. Next thing you know, you only have 10% of what you started with. And then it's super, super hard to recover because you don't have much capital to invest in trades to have much of a win percentage off of. So anyway, what is trading? Okay, so let's get into that first. So there are different types of traders. There are swing traders, there are day traders, there are scalpers, and then in between that, there's also short traders, there's long traders, there's breakout traders, there's traders that specifically buy dips, there's traders that buy off news events, they trade news events, there's traders that trade earning events. Okay, and then you've got the longer term traders who usually you could consider long-term swing traders or investors. Okay, so yes, that was a lot. The first thing you need to do when you're trying to figure out what you want to even get into is think about first what are your goals for trying to get into any kind of trading of stocks. By that I just mean buying at one point and with the intention of eventually selling. Right? Because even if you're an investor, a long-term investor, your whole point of buying is not just to donate your money to support a company. Eventually, you want to see profit off that. And the only way to realize that profit would be to cut that trade eventually and sell. Okay, so that is technically a trade. You bought the stock and then you sold the stock later. So I'm using that term a little bit loosely, but to encompass everything. But what kind of trading do you want to get involved in? Are you the kind of person that wants to kind of put your money into something and let it sit there and appreciate over time and come back later in a couple months or a couple years? Or are you the kind of person that wants to kind of get your hands dirty, I guess you could say, and be in there and be involved with the price action throughout the day or throughout the course of a couple days instead of a couple months or weeks or years? Or are you the kind of person that not just wants to be in there throughout the course of the day, but be in there every single couple minutes, buying, selling, trying to have a fast turnover on your trades and trying to catch as many moves as possible? That's the question you need to ask yourself first. How much time are you trying to commit to this? What style of trading are you going for? Okay. And depending on what style you decide to go off of will determine what kind of things you really need to learn and what kind of things you really need to get yourself involved in. Now, obviously, going into the trading styles that are less involved is a little bit safer and a little bit easier because there's less things that you're doing, and so there's less opportunities to mess up and less opportunities to blow up your account. Okay, so I will say that the longer term trader that you try to become, the less chance there is that you fail. Okay, so keep that in mind. The more you try to trade and the more profit you try to make in a short period of time, the higher chance there is that you will make a mistake because you're executing so many trades, and those losses will add up. So if you want to go into shorter term trading, you need to do much more learning, if that makes sense. Hopefully that made sense there. Now, in this next portion of this discussion here, let's break down what types of traders there are, okay? And if you're new to this, you might not understand the time frames as I switch between them. Don't worry about that for now, but I'm just going to explain to you. So, a long-term investor, right, usually doesn't care too much about their entry. They care more so about what kind of company they are supporting, the fundamentals that make up the company, and why they're a good one to invest in. So, what kind of space are they getting into? Is the technology or the thing they're working on, is it breakthrough? Is it different than some other company? Do they just have faith in the product to the point that they think it's going to blow up and cause the company to blow up and be this big thing? And what kind of money does the company pull in per year? They'll look at the balance sheets and all of the fundamentals and just see what makes up this company and what makes it something I want to put my money into and come back in a couple years and see a positive return on my investment, okay? So that's an investor, like I said, usually doesn't care too much about the point of entry and what price it's at, because they believe, based off their research, that no matter what, long term, this company is going to continue to succeed, and so they will see a profit based off of the money that they initially invested. Think of that as me, for example, putting $20,000 today into Apple, or into Google, or into Microsoft, or into even Tesla, one of the large companies that you think are really going to stick around and are going to just improve over time, so there's very low risk with your investment. That's more of what an investor does. Now, a swing trader, okay, is not quite a day trader where they're executing trades all day, but they're also not quite an investor either. They're kind of in the middle of that, on the more frequent side of trade execution. And basically what a swing trader does is they will do some fundamental searching as well. Usually they'll kind of do a similar thing when it comes to what stocks they're going to swing trade. But a swing trade basically is when you put money in something one day and you let it sit for at least a day or two, or three, or maybe it could be a couple weeks, depending on the length of swing trades you like to execute. And then after a longer period of time, that's when you go to take your profits. And then you repeat that. Then maybe I'll put my money in Tesla when it's at a low price, and then come back in a couple weeks and take it out when it's at a higher price. And then I'll switch to Microsoft and do that. And then I'll switch to another company and do that. A swing trader lets trades go over the course of days or weeks, usually, or sometimes even months, but that's a really long-term swing trader. So they're kind of taking a step back. They're not taking a look at exactly what happened on this particular day, on this candle, like a day trader would, but they just say, okay, this looks like a good dip-ish area. I'm going to buy in just right about here, anywhere in this area, and hopefully we'll get up to somewhere in this area and I'll sell somewhere around there, right? Not so concerned about what's happening day to day, but they're looking for a multiple day or multiple week or multiple month move to capture profit off of. So that's a swing trader, okay? Now let's talk about the day trader. The day trader gets way more involved, and this is usually where things start to get a little more risky, because sometimes it's easy. You can look at your Robinhood app and say, okay, Tesla's never really been down to $500 per share, and today it is at about $550. That seems like a good value, so I'm going to throw my money in there, and I'll come back in a couple weeks and see if we're at $700. Yeah, let's do that. That's a swing trader, low risk. Day traders are usually trying to get in and out of trades on the same day. So they have to be right about not only the fact that the price is going to go up, but they have to be right about their moment of entry as well, and make sure that they are getting in at the low price and that the price will go up in a short period of time so that they can then close that trade and move on to the next one. Because usually a day trader wants to execute multiple trades per day. Since they're not capturing such a large move over days, they want like the move from here to here, for example. So let's lower down our time frame and look at what a day trader might be looking at. So let's go to Tesla stock. A day trader is typically way more involved. If they have a full-time job, they probably won't be a day trader, because day trading usually ends up being a full-time job. This is usually where people get involved to the point where they don't really have much else going on. Day trading is kind of like their 9 to 5, you could say. They are all in when it comes to being focused. They'll usually trade on the lower time frames, and they will look for opportunities to capture smaller moves, but good moves nonetheless, okay? So a day trader, might say, "Oh, okay, this price is coming down. I'm starting to see a couple patterns. I want to buy a dip and sell at profit." And so maybe they see this and they say, "Oh, looks like some signs of reversal here. I'm going to buy in right here and I'm going to look for a quick profit." And so they catch this move and they cut it somewhere about here when things start looking a little weak. Okay, so they just caught a couple bucks, but with a lot of shares. And then they say, okay, that's good. Let's see what else is on my radar here. They'll check their scanners. They'll check all their screeners that they have going on in the background and look for the next move to catch. And they keep taking small moves like that throughout the day. Now, that is what a day trader does. They trade intraday, usually multiple times. Like I said, it's way more involved. They're usually looking more at the technicals, more at the patterns that are forming, less at what the fundamentals are of the company, because they don't really care so much about a long-term investment. They're just trying to catch moves in the price action that will end up being profitable. Buy low, sell high, find another stock that looks like it's at a good price, buy low on it, sell when it moves up. Look at another stock when it looks like the price is getting low and might reverse, and so they'll catch that reversal and then sell it up high for profit. That's what a day trader does. Now, there are different types of day traders, okay? So in that, there's people that short, and there's people that go long, and there's people that scalp. So let me explain what those three things are. Going long versus going short. Going long basically means you buy in with the expectation that the price will go up, and then that's when you sell. You make a profit. So you buy low and you sell high. Going short basically means that you sell high and then buy back low. Now, selling at zero means you go into negative, right? Because if I buy at zero, I then own, let's say, 5 shares, and then I sell my 5 shares at profit. When I short, I have 0 shares, and I sell 5 shares, and then I buy to get back to my 0 mark. I go negative 5 shares, and then I have 5 shares. The point is to catch moves in the other direction. So I'm selling shares high at a higher price to people. Let's just say I'm selling people shares at 588, hoping I can then buy them back at 584 and make the profit off of the discount that I'm buying them back at. That's what a short seller does. Now, of course, like I said, because you're a short seller, you don't have really any shares to sell. So you're actually shorting, you're going short in your bank account. You're shorting yourself of 5 shares that you don't even have. So short sellers actually, they borrow shares from their broker to sell. And that's what shorting is. You're borrowing shares from your broker. They lend those to you so that you can then sell them with the expectation you'll buy those back and then give your broker back those 5 shares that you borrowed from them. So it's kind of trading in reverse. You're profiting off the moves down. I am not a short seller. I don't really like short sellers, but I understand the short selling game. Now, prices do tend to go down in sharper movements than they do up. So in my opinion, it's probably a little bit easier to short than to go long, but you just have to keep in mind the risk is much higher as a shorter, because as a buyer, there's only so much that the price can go down per share, right? So if Tesla is $5.85 per share, it can only go down to 0. So I can only lose the money that I invest. As a short seller, though, there is no limit to how high a price can go. So I can buy a share at $5.85 or sell a share at $5.85, and suppose Tesla goes up to $200 million per share. I'm responsible for buying as many shares as I need to cover what I had already sold and borrowed from the broker. So if I bought 5 shares at $5.85 and Tesla then goes to $200 million per share, I technically owe the broker $10 million worth of Tesla shares, okay? So there's unlimited loss potential and limited gain potential, but it's usually faster gains and maybe in some cases a little bit more predictable gains, because you can usually tell when you're at the top and things are going to go down. I think a little easier than predicting when things will go up. So a little risky. I'm not a short seller, okay? So long is buying low, selling high. Short is selling high, buying low. And then what you have is the very short-term day trader that scalps moves. So literally, instead of being a day trader that's profiting from here to here over the course of like a couple minutes, a scalper is usually in and out within a couple seconds. They see a pattern forming where there might be a sharp move to the upside. Let's say right here, they see this, and they see that there's about to be maybe a move up. So they capture like this candle right here, maybe this candle too, a little bloop, little move up. with a ton of shares. They buy in a whole lot of shares, so that selling right here will actually generate them a good amount of profit. So they only capture little small movements, but they do it very fast, and with a lot of shares. Like I said, a lot of money invested, so that ends up being profitable for them and worth it. Now, that's also a little risky, and of course, it's probably one of the hardest methods of trading to do as well, because you have to be on your game. You have to have good software that's going to execute trades quickly. And I'm sorry, I'm still showing my face on the big screen here. Good software that's going to execute those trades quickly. And then you also have to know your stuff, because you don't really want to be wrong with all those shares bought in and they go in the wrong direction too much, because then you're losing money super fast. So it's a little scary, I guess you could say. And that's probably the last thing you want to get into as a new trader. All right. So that's pretty much going to cover the main types of trading. So again, you need to ask yourself, what type of trader do I want to be? Am I getting into this just so I can buy at a discount one day and come back in a couple weeks or months and then sell at profit? Or do I want to make this a really involved thing for myself, where I am every single day researching the stocks that I'm going to look at, have a watch list plan for the next day, get in there, set up my equipment, set up my scanners, and go looking for stocks that are making a lot of moves that I can take profit on? If so, hopefully you don't have like a full-time job that's super involved that will take a lot of your time, because this really can become a full-time thing and requires a lot of attention if you want to do it and do it right and be profitable. Also, it takes more experience and more practice, because you have to then think about like aggressive stop losses, when you're going to cut your trades, when you're going to set your take profit targets. Just a whole lot goes into it, things that we will discuss in the next couple videos. But again, just start asking yourself the question, if you haven't already: what do I really want to be doing when it comes to trading stocks? Long term, little involvement, or am I trying to go at this thing every single day and make it my career, basically? Hope you guys enjoyed that video and found it helpful. If you didn't know what the different types of traders were in the stock market, now you know. And in the next videos, we'll not only go over what we just did, but where those different types of traders play a role in the price action, in the price movement. And that's where things get really interesting as we get into trading psychology and understanding why things go up and down at certain times, and why things pick up and slow down in movement at certain times. Very interesting stuff. Anyway, hope you guys found this video useful. And this was just video 1 of the entire course. Many more to come. Stay tuned for that. And happy trading.